But he should at least tell you he's not coming.
So if this insurgence of cash, $700 billion, goes into these banks that are failing, in 6 months we'll know if it worked. If it doesn't work, if it's not enough to sustain, we got to consider that we may not be able to recover economically. And then the banks are going to fail, and then people's savings are going to start pulling. It's going to be like a depression like it was in 1929. At the same time, we could have a scenario where we can slowly work hard and we can get out. We can have little things like you're doing, little things, and then it comes together. That would take a lot. I was saying about the credit card companies, what happened is they got greedy. So you asked how this all happened. So the credit card companies are supposed to charge, 8 or 10%. That's fine. 5%, 11% if it's really bad, But they're charging 30%, 32%. So what happens is people eventually go, what the hell? I'm not going to pay it. And then the whole loan fails. Then the company loses money. The insurance goes up. The insurance companies are losing money now. AIG, very old company, long in business, very prestigious company, failed. And people that are in that stock lost all their money, basically, just about. So,
how's Prime America?
I don't know. But anyway, so that's part of the problem you asked. The credit card companies got greedy, and now nobody's paying the loans. And who would pay a card that's 33%? For what? To save their credit? For what? To get a loan now, which is, there's no loan now because there's no bank to loan you money now. There is, but they're more strict. However, we can still do strategies that build income, writing covered calls, collecting millionaire dividends, selling straddles, getting in the best positions that are going to actually even make money in a bad market.
So you can make money in a bad market? Yeah.
Exactly. And then you'll have a portion of your account that's short. So say we're shorting the diamonds and we're shorting the Qs. And that way when the market goes down, we're making the money. And that's going to cover our long positions. So that's a balanced account.
Good.
Build a balanced account. Then you're doing your meditating over there.
What?
Here's another one, Berkshire Hathaway.
I don't know who that is.
That's Warren Buffett. Look, Warren Buffett has here 175 billion market capital. The only one I found that was more than that was Exxon. But Warren Buffett, he did well this year.
I heard of him.
He maintained.
What does he do? What stocks does he do? What is he?
He has a holding company that owns other stocks. That's really what he does. Insurance and other stocks. He has like GE and McDonald's and Coke, and he has other smaller investments. And he is a market guru. He does well. Whatever he's buying Wells Fargo now, so Wells Fargo may go up. But in this kind of market, it's tough to pick a stock that goes up.
Exxon.
Exxon announced they had the biggest profit in all history in any company. Interestingly, they had it when the gas prices were so high.
Yeah.
So they're saying, oh, we're not making any money because OPEC's charging us more money. We're not making more money. It's not like that. Well, maybe it is like that.
What do they think? Would they think we're done?
Let's see. Yeah, they think that's what they think.